Okay, hold that break for a minute. We have ITC's numbers to analyze, and you've got the profit figure coming at 3,200 crores. A good 100 crores higher than what the ET Now poll pegged the number at. So, this would be seen as a beat. Marginal beat on that base, but even so a beat nonetheless. We would watch out for, of course, their revenue figures and what they've done in terms of the overall performance, how margins have been defended in this particular quarter. I think what I'd be very interested to see is what they've done with the tobacco side of the business, the cigarette business in terms of volume growth, and also whether or not there are early signs of a more significant contribution coming in from the FMCG side of the business, which is what the market is waiting and watching out for, and which is where the value bias is accruing for the business. As of now, the only number that we have on the screen is 3,200 on PAT, which is a clear beat. The stock is up about 0.5%. As we get in more details on the sales side, the breakup between FMCG and cigarettes, we will be able to comment more on the earnings internals. But so far it looks good. The sales numbers, I think that gives us the operating level performance in a bit more detail, where at least you see the core of the business on the volume side, on the sales side, coming in higher than expectations, and I think that would trickle down to margin maintenance as well, because this time around commodity prices have been a bit supportive, and so you've not seen a bit of an overrun on costs on that front, and that would cushion margins as well. So I'd reckon that the margin performance would look okay, and that would give the stock its due fillip. So margins in line with expectations, 43.26 coming in there on the EBITDA front. All in all, this seems like a good set of numbers. No, a slight miss actually on the margin front, 38% versus the ET Now poll of 40%. If the market were to see that as operational inefficiency, then you would see the stock tumble a bit, which is what we are seeing as a reaction. But I still don't think that the numbers overall look that bad unless there has been a major miss on cost efficiency, which it seems like to be the case.
The only aberration in the numbers would, I guess, come in from the cigarette volumes because of the low base last time of a negative 5%. That's a degrowth. We're expecting the numbers to look a little bloated, and perhaps a cigarette volume growth of 6% is going to come in. So maybe there's been a miss there. We don't know. We will get Mubina in just a short while and get a better sense of, where exactly has the growth come in from. And Mubina, the PAT and revenue are a beat. Margins seem a miss, but do you have any more details on how the hotel, FMCG or cigarette volumes have panned out, or we'll have to wait a little longer for that, I guess?
Well, I think however long you wait, ITC never comes out with their volume numbers. But yeah, since you already do have the headline numbers, I'm just going to give you the internals. The cigarette revenue growth seems to be pretty impressive, 5073 crore versus 4629 crore. So it's almost about a 9% jump in the cigarette revenue growth. Not bad at all. Remember, there are volume expectations are approximately at about 6% and do remember we also have the low base that's going to be aiding cigarette volume growth. A quick calculation of what exactly the FMCG business has done. It's come in at about 3,200 crore. This is of course the other FMCG business apart from the cigarette business. So 3,200 crore versus 2,871 crore. This is again coming in double digits because it's a 400 crore rupee rise. So it's almost in in double digits. In fact, it's almost 15 to 16% of a rise that we're witnessing in the other FMCG business. The rest of the businesses look very okay because it's a 50 crore rise on a corresponding quarter basis in the hotels business on a base of 400 crores that puts it at about 10% odd. I think even the agri business and paperboard business has done pretty well this time around on a year-on-year basis. All in all, it's been pretty decent. The EBIT for cigarette has gone up by about 10% odd. So there may be a tad bit of compression on the EBIT margin front when it comes to ITC's cigarette business. But I think otherwise on the top line front, they've done very well. Where I think the disappointment has perhaps come in slightly is on the margin front. We were in fact expecting the margins to exceed even 40%, come in at 40%, but it's coming more or less flat. I would say they are in line. I would not say disappointing, but they've come in just about okayish. In fact, to just give in a bit more perspective on ITC's numbers, we have with us Naveen Trivedi. Naveen, hi, thanks for joining in. Before I ask you about the internals, let me just get in your initial take on the numbers.
So largely numbers are in line. 10% kind of revenue growth in cigarette indicates that volume growth will be in a tune of around 6%. So that is broadly in line what we were also expecting. And the cigarette EBIT growth is around 9%, slightly tapered than what we were expecting, but nothing material changes from that point of view. While FMCG 11%, we were expecting that things will be slightly more in FMCG side. However, the other segments are relatively performed well. So like agri 26% growth, because that has been the trajectory for agri business, because there is more of a volatile business. So that kind of lumpiness we always have noticed in the case of agri. So largely numbers are in line. So there is no disappointment from, I think, in a larger context, if I see.
Right. Largely in line, no disappointment as such. We also have with us Sanjay Manyal. Hi Sanjay, what would you make of the margins? I mean, are they in line with your expectations? Because, if I look at it, agri I think has shown a bit of a decline on the EBIT front, though of course agri at this point does not contribute much. On the hotels front as well, it's been a very marginal expansion. So what would you make on the operational profit front?
One thing I think agri, as you have already said, that it's a trading kind of a business, so I don't think margins in trading is matter much. However, one thing is important, that FMCG business is continuously making profits. So 76 odd crores kind of a profit they have done in the FMCG others. So which probably is indicating the fact that they probably would be able to earn a good year-end margin. So I would expect that the exit margins for the company at the EBITDA level would be somewhere around 5 to 6%. EBIT margin obviously is approximately 3%. So this is probably one of the years where they are making profit in almost each and every quarter in the FMCG side of the business. As far as cigarettes is concerned, so there's a usual 9 or 9.5% kind of a sales with what I have seen. So I think it is better than what we were expecting. We were expecting somewhere around 49, 50 odd crores of sales, but they have done 50, 70, almost 100 crore more than what we were expecting. So I think the volume growth has been, so our expectation was 4%. I think the volume growth has been better than that. So in that sense, I think results are pretty good.
Just a back of the envelope calculation, if we have to consider the price hike, Sanjay, approximately what would that leave the volume growth as per your just offhand calculations? So
it will be very difficult to say, but I think it will be more than 4%. That's what I understand at this point in time.
Than 4%. So at least on the top line front, it's really been able to do pretty well, ITC. Naveen, the management doesn't talk as such, but if you had to pose a key question on these numbers as they stand right now to the management, what would that be?
Like, we also need to get a clarity considering the stable tax environment. Now my question will be how they will play their cigarette mix. Because in a stable environment, they have that comfort and edge to play their premium and dark aspects also in a better way. So we need to understand how they will play that mix also going ahead. And in addition to that, in FMCG side, I will also look forward at how the EBIT margin profile, and I will continue to be in improving trajectory. Like we all expect the 4 to 5% is something which ITC should ideally achieve in a medium term time. So we need to see how this trajectory will pan out in the coming quarters.
Far cry away from that compared to other FMCG behemoths who naturally have been sitting on very high margins. For ITC, I mean 76 crore on a quarterly revenue of 3,200 crore. They have a long way to go over there. Sanjay, I'll pose the same question to you. I mean, cigarette mix was one thing Naveen flagged off, also about the EBIT margin front. What about you? What are some questions that are currently occupying your mind after the Q3 numbers?
So obviously one thing which probably is very important, that it's been almost more than 1.5 years that GST rate has not been increased. Now obviously company cannot really mention anything about that, but obviously one has to see how the GST rates move really from here, because if government really decides to even inch up some bit of GST or cess from here on, then probably it will have some sort of negative impact. But one thing is clear, that at least from 1.5 years there has been a stable taxation after almost 4 to 5 years of very steep increase every year in excise duties.
Okay, all right, gentlemen, Sanjay as well as Naveen, thanks so much for joining in with your take on how ITC has done in the third quarter. Do remember, a low base has gone quite a long way to aid ITC in posting a good set of numbers, especially on the top line front. You heard out both of our analysts, and they did say that it's definitely about at least 4 to 5 odd%. So I think good going, a beat on the top line, margins in line, profits as well have come in line. The stock price, however, has come off sharply, but I think that's just the general trend in the market as well. As we speak, the Nifty is below 10,900. Quick break right here on closing trades.